Bitcoin, is the bottom in, or are we going to finally crash below 10,000? My name is Mike Mads, and today we're going to talk about the potential bottom for the market cycle. Enjoy. All right, before we start the video, please like, comment below, whatever your thoughts are on the market cycle, did we bottom or not, and check out my links in the description below, and of course, subscribe. In order to make any kind of assumptions about the market cycle bottom, basically all we can do is to look in the past, compare cycles to each other, and pretend that we might be able to snipe or know where the bottom is. In reality, almost nobody catches the bottom, and it's a fantasy you shouldn't be actually looking to aim for. Usually after the bottoms we have long accumulation phases where you can DCA in, or you slowly DCA in on the way down. That's also a possibility. But for today, we're going to look at possibilities for the bottom and why I think we might be possible close or already hit the bottom for this market cycle. All right, let's go to the charts. Perfect. If we look at the chart, the first thing I want to point out to is a very, very simple fact. If you compare those three cycles, for example, you can see each time we had a blow off top, we had the peak of the cycle, we had a correction being started. We had some relief rallies in between where the price pumps back up, traps a lot of people, and crashes further down. Okay, we had it here 2014, we had it here 2018, market cycle peak, relief rallies, new lower created, accumulation phase, also here, accumulation phase, and the next cycle began. Same thing happened here. 2019 we had some sort of small rally which did a 4x. However, I wouldn't consider that a cycle. However, still you would be able to have made a 4x here. Then we had the Corona dump and things started taking off again. We had a double peak this time, and now we're into a bear market. So very, very simply put, let's start off with the time of the cycles. As you can see, the first cycle from the top to the bottom took around 426 days to hit the bottom. Okay, very simply put, you can see in the last cycle, okay, 426 days from the top to the bottom. Going to the 2018 cycle, from the top to the bottom, it was around 365 days. Okay, till the bottom occurred. Then we had this semi-bull phase, and if we go to this current cycle, 2021, 2022, we already been, depending as where you see the peak, either 426 days now already, or 212 days from the second peak. However, you can argue, also OnChain shows that the first peak, even though it was lower in price, was much more prominent and was much more of a market cycle top than the second peak. Even though the second peak was higher, I would consider this more as a dead cat bounce. So according to days, simply put, we're very, very close to the bottom. If not, we already hit it. Okay, that's the first metric, very, very simply to look up the days. Okay, as we covered the first point, simply to count the days from the top to the bottom, a very simple thing to do, but a very logical thing to do. I'll also have to add, because for the next point it's kind of important, that diminishing returns are a real thing. Okay, if you compare the cycles, you can clearly see that the gains cannot be in the same pace all the time. You have to have diminishing returns, simply put, because Bitcoin cannot be at $2 million in 1 year. Okay, so diminishing returns to the upside, we are seeing those, especially in this cycle. So I'm expecting, my thesis is, I'm expecting diminishing returns to the downside. Okay, so if you compare the next point, the drawdown from the top to the bottom, the percentages. Okay, this cycle here, 2014, we had an 85% correction. Brutal, wrecked the entire market. Altcoins died, it was brutal. Next cycle, 2018, 84, 85% correction. So similar percentages, but keep in mind the gains were also astonishing. Okay, coming to this cycle here, we're already at 74 to 75%. When we hit the 17,500, we were around 75% of a correction. So what this data is telling me, or what this data should tell you, is that we are close to a bottom. There is a possibility that that is already the bottom as the asset class is growing and maturing, but there's also a chance we could drop lower. Especially if you look back to history, there is definitely a chance we could drop lower. However, my hunch is that we're very, very close. If not, we hit the bottom. Okay, second metric, percentage drawdown. Okay, coming to the next point, you can already see it on the screen. Keep in mind I'm using a picture here of TradingView because my computer is acting up. So I'm not using the website itself. I just made a picture of it, just if some people are wondering. Okay, next thing is the RSI. The RSI is the relative strength index. Long story short, it shows you if an asset is overbought or oversold. Okay, I've marked the three bottoms of those cycles in. You can see it in the blue lines here. And you can see each time we hit the bottom, you can see where the RSI has been at. Okay, so in this time here, about around the 1st of January, the RSI was at 45. Okay, relative strength index was at 45. Next cycle here, 2018, the RSI roundabout was at 43. It dipped down lower, of course, a little bit, but again around the same metric, 44 to 40, 43 to 45. Coming to this cycle, and for me a key indicator, one of the key indicators that the bottom is close or already hit, even though we have a different macroeconomic backdrop this time, we are at the lowest RSI in history on the monthly. Okay, the RSI is at 41. So, and you can see we clearly bounced from that level. Currently we're having some sort of relief. Okay, so what that tells me is there is a convergence, a clear convergence between the time of the cycles from the top to the bottom, the percentage drawdown, and the RSI is lowest that it's ever been. Okay, coming to the next thing, it's an on-chain analytic. It's on-chain data. It's the SOPRA. It's a spent output to profit ratio. Again, here you can read the description below, but long story short is if it's below 1, people are realizing losses, so they're selling at a loss. And if it's above 1, people are actually taking profits. It's a nice indicator I like to use, or I will use especially for the next cycle, because usually when people are taking profits, you should be cautious, especially if they're taking profits at this amount here. If you can clearly see people are taking massive profits on the run-up, on the first run-up, you should be cautious, and you can use this on-chain analytic to gauge your risk. Usually on-chain is always bullish. With SOPRA, it's a very, very simple tool you can use, because currently, as you can see, we have been and we are definitely below 1, which means a lot of people are fearful and a lot of people are realizing losses, unfortunately. They're selling at a loss. And my theory is, or my thesis is here, usually when people are selling a loss and fear is high, I like to slowly start DCAing in. As you can see, it doesn't mean you should start right away, because here at this price, the Bitcoin was at 30K, and of course we were below 1. You should have waited a little bit longer in order to catch the bottom. So this tool doesn't indicate bottoms. However, it helps me to gauge how bullish or how bearish the market is. Currently, as you can see, there's a lot of selling and loss, unfortunately, which tells me though it's a good time to buy because fear is high. So fear is high, as we said. However, the thing I'm looking out here for, and in order to see if the bottom is over, in my personal opinion, is if we break the neutral position and we start heading back above 1. If we start doing that and we're clearly above 1 again, I think the worst is over and the accumulation phase or the next cycle should begin. Not financial advice. All right, coming to my last point, a very subjective point because it's my personal opinion, it's not based on data or anything, is the fear in the market. Okay, There is massive fear in the market, clearly. We have a war going on. We have inflation peaking, and we have rate hikes higher than they have been anticipated, okay? And on top of that, we have a recession around the corner. So fear is seemingly at an all-time high, and people are freaked out. People are running into cash, are running into the dollar in order to feel safe, even though clearly they're losing money due to inflation, guaranteed, okay? So for me, this is one of the cherry on the top. The fear in the market is indicating me I have to get in and I have to start DCing at those prices. Are we maybe going to drop lower? Yes, but that's why you always have a separate cash position ready to DC even at lower prices. However, you have to get out of this idea or fantasy that you will have a huge cash position and wait for the exact bottom to snipe it and buy at the cheapest price possible. Some people do it, but some people also win at the lottery. All right? So, most important thing, don't get wrecked.